Now to the other developing story this hour, that's the financial crisis affecting one of Switzerland's largest banks, the possible takeover of Credit Suisse. The Financial Times is reporting the UBS, which we knew as the country's biggest bank, was being lined up to take over Credit Suisse, that it may have made an offer. The kind of offer, frankly, at the moment, Credit Suisse is in no position to reject. Let's talk now to our business correspondent, Mark Ashdown. Tell us more about this, insofar as we know anything.
Well, absolutely. I mean, the usual caveats here. This is a fast-moving situation. This is a report coming out of Switzerland. Financial Times reporting it. We haven't been able to confirm it ourselves just yet, but they are saying that the UBS group has offered to buy Credit Suisse for up to $1 billion. Now, the interesting thing there is I was here about an hour ago saying that the stock price has dropped from 80 billion Credit Suisse some years ago when it was at its peak to about 6 billion on Friday. So if this 1 billion is the sort of ballpark we're talking about, that is still a fraction of where the shares closed on Friday.
That's a kind of bargain basement price in banking terms. Right?
And I think that's the sort of environment we're in at the moment. The other very interesting thing here is the Swiss government, as we had confirmed, were overseeing the talks between the regulators and UBS and Credit Suisse. It does appear that potentially they could step in here to bypass the country's laws, whereby under normal circumstances, if an offer came in like this, even a distressed bank, it would have to put to shareholders. They would have to vote on it. That is sort of the constitution. So,
and presumably not just the Credit Suisse shareholders, the UBS shareholders. Well, we want our shares put at risk by taking on this problem bank?
And precisely, and as we were hearing earlier, the fact this is Switzerland's two main banks here, some will be queasy at the prospect of all of a sudden creating a sort of super Uber bank.
Especially one with liabilities.
Well, that is the other issue. We understood some of the stumbling blocks here that they were discussing were the potential liabilities, because Credit Suisse has had its issues for many years. I mean, it's got a rich history, 170 years it's been around for, but in the past few years it's been beset by problems, obviously reported these issues with its financial reporting earlier last week, which kind of triggered this whole domino effect. So there will be potentially some nasties lurking on the balance sheet they'll have to deal with. So I think they were seeking some kind of backstop from the government that they would stump up some of this money potentially, depending on what they find. But I mean, clearly $1 billion is pretty cheap, and we understand this could be pushed through. It's not a deal as yet, and as I say, we haven't stood it up, but it could be pushed through as early as this evening. And again, nodding to the importance, the pace of this, because of the impact this is having on the wider banking world and the entire financial world.
And that's really interesting, isn't it? Because there are a couple of things that I'd be interested in your kind of judgment on. One is this question of systemic risk. I mean, we've had two banks in trouble in the United States just over a week ago. No suggestion that Credit Suisse is connected to that, so there's no kind of obvious connection. But nonetheless, it's raised concerns about the health of the banking sector. And the other aspect that comes up with Credit Suisse again, and one of the grumbles over a length of time, as you will know, is this debate about retail banking, in other words, our money and the money from businesses that lend and borrow and all the rest of it. Or, it borrows and it makes money off our savings or their investments and it gets back. And the investment arm, the big bit stuff, the big worldwide stuff that means that you see Credit Suisse's name in New York and Hong Kong and all the rest of it. What's your perception of those? I mean, are these live concerns or is everyone still saying what they were saying a week ago? This is nothing like a banking crisis. This is very specific. Because you could say, well, yeah, but they were different, but they're both in trouble. So what's going on?
I think, to take those one part at a time, 2008 was a very different time than now. I think there's a feeling that every bank pretty much was exposed to that. It was bad mortgage debt, it was badly packaged up financial instruments, which every bank was exposed to.
They were all in that field.
So once one went, there was a huge collapse of the house of cards, if you like. I think then post 2008, stronger regulations were brought in to ensure that banks had stronger balance sheets, could ride out difficult weather. I mean, frankly, it's heaving it down at the moment. So they're being stretched to the limit, aren't they? Yes. And incidentally, Joe Biden in America was talking about last week about Donald Trump rowing back on some of those regulations. That's potentially why Silicon Valley Bank and First Republic and Signature sort of fell into some of these issues. So I think if we look at Credit Suisse and SVB, very different problems they've had. But I think the trouble is, when it comes to certainly stocks and shares and markets, it's all about sentiment. Sometimes common sense goes out the window. It's all about fear, greed. At the moment, we're in a very fearful, nervous situation, as we saw stocks across the world sliding last week. So I think that's what they've been looking at here is, how do they move forward? A deal to keep Credit Suisse going. Firstly, it is frankly one of the banks that is too big to fail. But then, how do you sort of save a bank like that? So I understand that some of these talks have been centred around restructuring. It has 95 domestic branches in Switzerland, which do your standard banking. But then it's this investment side of things as well. Very rich customers that bank with them. So I think they will be looking at how they could break that up, and of course that then impacts jobs. We know they have about 50,000 workers around the world, 10,000 between UBS and Credit Suisse working in Canary Wharf.
Who
and
might
the City
well
of London.
be doing the same jobs for two different banks, and
then
suddenly
the
if
issues
there's
there,
one bank...
so there's a lot of details here to work out, and I'd imagine there's some concern over sort of how the bank looks going forward and what that means for people's jobs.
Mark, I know, because I said it an hour ago, and lo and behold, here you are back. I'm going to say, yes, in the words of Arnold Schwarzenegger,
I'll be back.
You want to say it. Thank you very much. Mark Cashstone, our business correspondent and not Terminator.